What's up, guys? It's Cash Flow Cart. This is serious. Today, we are getting serious. You guys can see the screen SCHD or JEPI on the next dip. And, I've addressed it before on this channel. I have a full video out that basically, views as a rant about my feelings on the JEPI ETF. But as a community, guys, we have to do better. We have to stop blindly trusting, that these ETFs that, everyone's talking about all the time, it's all you need. I don't know where this notion is coming from all of a sudden. I don't know if it's social media. I don't know what it is, but let's get into it. And I'm not going to talk your ear off today, again, complaining about JEPI, but let's try to get somewhat of an understanding of what SCHD, really is. So again, for what it's worth, SCHD, it does well at tracking, what it's supposed to track. It has, I guess, a lower expense ratio in comparison to a lot of other ETFs at 6 basis points. This is the Schwab US Dividend Equity ETF. We go to Schwab Asset Management, we go to their website, read through here the objective. This fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend Index. And, first off, I think a lot of people are just buying SCHD, just thinking that they like dividends, so this is what they do. I don't even know if they're looking into this at all. So, we're going to look into it really briefly. Again, tracks the Dow Jones US Dividend 100 Index. So, what are we doing here? We go over to, I guess, the Dow Jones Dividend and Indices methodology. Brings us to this PDF. We can scroll down and find the Dow Jones US Dividend 100 Index. Okay. So, first off, this index takes a universe of stocks, dividend payers, and it excludes REITs. They must meet the following criteria: 10 consecutive years of dividend payments, a market cap of greater than 500 million in US dollars. This ADVT here, an average daily volume traded of $2 million. That's simply, for liquidity purposes, if Schwab has to trade in and out of a stock for whatever reason, then they have that daily liquidity. I guess my dog wanted to star in this video as well. Sorry about that, guys. So we talked about, after Dow Jones, after they construct this dividend stock paying universe, just screening all the companies through 10 consecutive years, they meet the minimum market cap and there's some liquidity intraday. Then they move on to the actual index construction. Okay. So we get the eligible securities from here, this preliminary screen section, I guess. And then, if a stock makes it through the screen, the eligible securities are ranked, using 4 fundamental base characteristics. It's going to be the free cash flow to total debt. They're going to look for that ratio. Okay. Obviously, they want that number to be higher, more free cash flow, less total debt. That's just kind of a math thing, I guess. Smaller denominator, bigger numerator. Okay, I'm not a mathematician, so let's not act like I am. But return on equity, they want a high return on equity. So in other words, a company is able to generate, better returns with the equity they have invested as compared to, I guess, the risk-free rate and the other companies that are in this kind of, in the eligible securities list. IAD yield. I'm not even 100% sure what that means, guys. So we'll look it up really quick. Again, when you're selecting a company, it is super, super important. A company or an ETF, you need to do your due diligence. Okay. You need to understand the investment you're getting into. You need to understand what purpose it's going to serve, what the tax consequences are going to be like. And this stuff does not take that long, guys. But, this trend of blindly trusting SCHD and JEPI has kind of hit like the plague amongst this investing community. So IAD, an indicated dividend. Okay, indicated annual dividend. Okay, so the dividend yield is basically what this IAD means. What the current dividend yield is. Moving on. This 5-year dividend growth rate, they're going to rank that with the other eligible securities. And the way they're going to rank that is using, this fancy formula. Essentially, what this formula calculates is going to be that 5-year compound annual growth rate of the dividend. Obviously, higher is better because, I guess if a company has aggressively increased their dividend in the past, then, they could continue to do so in the future. And I guess that's part of the reason why we've seen SCHD increase their dividend. SCHD isn't really increasing their dividend, but the companies that make up that basket of stocks are. And that's, again, I really don't know if people fully understand this one, but, moving on. So they take these 4 rankings we just discussed. They're equally weighted. This creates kind of a composite score. And then the top 100 in that composite score, that's the index. All right. Those 100 companies are going to make up, the roughly 100 holdings within SCHD. Okay. Again, track as closely as possible. So it's not always going to be perfect, like SCHD holdings perfectly aligned to, the Dow Jones US Dividend 100 index. But, for simplicity's sake, I want to say they're kind of the same thing. With that in mind, guys, this reallocation, this whole process at Schwab, they kind of reallocate biannually. Okay. So essentially what happens is companies that no longer, fit this criteria are moving in and out of that index. Okay. And they're going to move in and out of Schwab's portfolio. So, just with that kind of big picture in mind, the idea that SCHD is some perfect ETF, some perfect, dividend portfolio, I mean, it's got to stop because, anytime you have 100 companies and you're just kind of doing this, mathematical screening index construction, you're going to have losers. Okay. Sure. There's going to be winners, but they're going to be capped at that 4%, starting allocation. So, not to beat a dead horse over this, but as a community, we need to do better with understanding our investments, and we need to stop putting, ETFs on a pedestal just because, I don't know, just because they're talked about a lot. Again, I didn't want to spend too much time on that point, but stuff happens. Let's move on and address some other misconceptions and I guess look at this one from a few different angles. Okay, I said we were going to move on, but I even see this type of stuff. First day of dividend investing. First off, I read this. I'm like, awesome. This is amazing. We have a new dividend investor within the community. Starting with a 70-30 split, 70% SCHD, 30% JEPI. And I understand, for some, they just want a dollar cost average into funds or ETFs, mutual funds, whatever they want to use. And they don't really have the risk tolerance to kind of, seek better returns through finding undervalued stocks. So I can't hate on someone beginning their investing journey. However, why is this just like the automatic default? Okay, I don't get it. Am I missing something here? Because, I dropped an entire video about this, whole JEPI problem we're seeing in today's society. I got some negative feedback on the video, some positive feedback, but if you guys want to check that out, feel free. I'm not even gonna air it out about JEPI today because, I need to take a break from those types of criticisms. But again, don't have this limiting belief that you need to just do what everyone's doing and buy SCHD and JEPI. I don't understand it. We're beating a dead horse, but moving on. Hopefully, we can get to, a little more interesting stuff. And the last thing I am going to say, kind of along these lines, you know, SCHD holders, you probably don't even know this, but Pfizer is currently a holding of SCHD. So, when I see stuff like this, is Pfizer really a good bet? We've seen Pfizer, get beat down. And I think a lot of it is due to foregone COVID revenue. The market has beat Pfizer down. I mean, we talked about kind of the falling knife pattern it's in, but, so let's say you have an opportunity to just continue dollar cost averaging into SCHD, or if you have a little higher risk tolerance, you can trust that this is a long-term game. There's going to be mistakes. You're going to get diversification throughout the years as you identify other opportunities. You could also look into Pfizer because you're already getting exposure to Pfizer with SCHD. So I don't know. Why are we settling for a basket of 100 stocks that are just mathematically selected when there's opportunities within those 100 stocks? There's great opportunities. I mean, you're going to get a better starting yield with Pfizer. I'm going fast here, but this video is not a Pfizer pitch. This is just kind of a, example. You're going to get a better starting yield with Pfizer. You're not going to be paying any expense ratio. So you're not going to be making, managers at Schwab. You're not going to be paying them money for the rest of your life. You're going to be making yourself money. Again, I think there's more upside to Pfizer stock, but that's my own personal opinion. I wanted to include this example so I can kind of get you guys in the mindset of, what we do as dividend investors. Okay. And that's identify undervalued stocks, and the yield has gotten driven up while the fundamentals of the company, they haven't materially, I guess, deteriorated. That was a big word, two big words. And then we can lock in that starting yield. We aren't paying any, fund manager, any sort of expense ratio, and we're enjoying the dividend growth and compounding effect. Okay, guys? You can do this with dividend stocks. Okay? You don't need to just follow blindly. JP Morgan does a covered call strategy. We're going to have to go with JEPI. Schwab does this, index where they track Dow Jones. You can do this on your own. Okay. It takes commitment, and, it takes a little more time rather than just blindly averaging into certain ETFs that you see on the internet. But I don't know really where I was going with that, guys. I'm fired up. I'm ready to take advantage of opportunities, within the dividend paying universe every single day. Well, every single day I can invest money. And I just think we need more. I think we need to bring back that mindset, that hunger for outperformance. And we'll get into it more later. Moving on. I thought this was interesting. So I think I'll go through like a quick 100K, portfolio example. And again, so the question was, if you were gifted 100K today, where would you put it, and what is your 12-month goal? So, just kind of for fun, in a very quick manner, I kind of constructed a $100,000 portfolio. And, the point of me showing this is not to say, okay, buy these 5 companies now. I'm just showing this because I want you guys to kind of see, okay, maybe these tickers have some undervaluation right now. It's driven some of these starting yields up. And if I have capital, I need to be identifying the best opportunities, the opportunities that aren't going to come around next year. SCHD is going to be there a year from now. Okay, so I threw together this portfolio with Coke, Altria, Pfizer, Hershey, and T. Rowe Price. Some stocks I've had my eye on or added in previous weeks and months. Equally weighted them at 20,000. I guess we'll take a look at kind of the stats of this $100,000 portfolio. Okay, so it would yield $5,113 annually in dividends from this, theoretical portfolio. That gives us an average dividend yield of 5.1%. And again, I don't want to spend too much time on this, but I just threw some tickers on here. Maybe you guys will be interested in some of these companies and I guess looking further into them, doing your own due diligence. I know I've released a video about Coke. I've released one about Hershey. Altria, it'll be coming out at some point, but I got to gather my thoughts for that one because it's kind of going to be about the tobacco, sin stock area as a whole rather than just, an Altria position. I don't know. That video's in the works, but so here's a $100,000 portfolio I threw together. Moving on. Okay, this one's interesting. Dividend payout monthly versus quarterly. And I saw this question or discussion on Reddit, and I believe like the top reply was like, it doesn't matter if the yields are the same, monthly or quarterly won't have an effect. And I guess there is some truth to that statement. Like, if I get paid out $10, we'll go with, if I get paid out $12 from a dividend position and I get quarterly payments, all right, what's that going to boil down to? $3, per quarter. If I get paid that same $12 in monthly payments, that's going to boil down to $1 a month. I mean, this is not rocket science stuff. However, if we just take it at face value, there might be no difference. But that, more compounding periods that you can achieve with monthly payouts, having dividend income every single month, that's going to serve you better in the long run because it's going to speed up, that compounding interest aspect. Okay. So even if it's that same $12 a year, if you're reinvesting those dividends, doing it on a monthly basis is actually going to serve you over the long term better. I just wanted to, I guess, give my 2 cents on that. Moving on. Okay, so Walgreens Boots Alliance. I'm sure you guys are all familiar with, Walgreens. You've probably seen it around. And I think some investors are not being as careful with this one because they kind of see this 9.15% yield. Wow. That's amazing. 47 years of increases, over a 9% yield. Is this free money? Guys, the answer for me personally, the answer is no. And I haven't done some sort of extended due diligence on this one, but I do have, kind of hard rules I look at before I, examine companies more in detail. And one of those things is the net income margin. Okay, guys, I want a company that's going to have some leeway in terms of margins, that's going to be able to be profitable, regardless if there's supply chain issues, if there's a little more, theft than anticipated. And, with Walgreens immediately seeing such a small margin, for me, I'm not interested. I'm simply not. So, as you go through this game, you'll kind of get those, I guess, rules for yourself. You'll kind of develop your own system. And we're going to talk a lot about it on this channel. So, if you're interested in this game, then I would love for you to subscribe to the channel.